All right, so hi there. Let me start with the cash flow statement question that you asked. Okay, so let's do the reconciliation of cash flows. So basically what we're doing is we're reconciling operating profit with the net cash flow from operating activities for the year ended 30th of June 2016. So the first step in the reconciling process is always the net profit. So you start with the net profit first. Now net profit of Loss Unlimited is 15,000. It's in the income statement as net operating profit. That's 15,000. Okay, then what you need to do is you need to take non-cash expenses and revenue. So there is one non-cash expense, which is depreciation. You always need to add depreciation. You add depreciation, and depreciation is highlighted in bold under expenses. There's less expenses, including depreciation of 16,000, so you need to add that. Where is it? Sorry, give me this. We add 16,000. And proceeds is not a operating cash flow, so you need to less proceeds if proceeds are given. Proceeds from sale of non-current asset or sale of machinery. And that is 10,000. Then you take changes in non-cash, cash current assets and current liabilities. Okay, so do not take cash into account. Okay, so the trick here is now profits are credits. Now your net profit has a credit balance. So if the change in non-cash current asset or current liabilities is a debit, you minus. If it's a credit, you add. Okay, so let's start with accounts receivable. Has accounts receivable increased or decreased from the previous year? Okay, so accounts receivable increased by 3,400. So increase in accounts receivable is a debit, and you always minus that. Less increase in accounts receivable, which is 3,400. 3,400 should minus. Next is inventory. Check whether inventory increase or decrease from the previous year. Inventory has decreased from the previous year by 4,200. So decrease in inventory is a credit, you add. Decrease in current assets, you add. Decrease in inventory, you add 4,200. If my calculations are correct, yeah, it's 4,200. Do we take equipment into account? No, we don't take changes in equipment, as equipment represent non-current assets. Let me add more cells here. Rows, sorry. Add more. Okay. Yeah, rows there. That's fine. Okay, so next up we have accounts payable. Now, do not take accumulated depreciation, as it is not a current asset, nor a current liability. Okay, so let's take accounts payable. Has accounts payable increased or decreased from the previous year? Accounts payable has increased. Okay, so increase in current liabilities, you add. Increase in accounts payable. add, so accounts payable increased by 2,600, which you add. So increase in liabilities, you add current liabilities. Next, rent payable. Now, has rent payable increased or decreased from the previous year? Rent payable has decreased, and decrease in current liabilities you minus. Decrease in rent payable is a debit, minus rent payable decreased by $2,000. And that gives you net cash from operating activities. You should get 22,400. Okay. All right, so let's move on to the next question, which is based on a public issue of shares. We should have enough time. So in this question, they issued 50,000 shares and they received 60,000 applications. Okay, so step number 1 is to record receipt of application money. So what do you do? You need to work out how much they received on application. So each application paid $6. You take 60,000 multiplied by $6. That gives you 300 and don't worry about the numbers, don't worry about the dollar signs. 360. So this 360,000 is transferred to a cash trust. So you debit cash trust 360 and we credit application 360. Step number 2 is to record the allotment of shares. This is when the company finalizes the share issue process. So basically they need to reduce this liability, this application, and also call for the next installment, which is allotment. So we debit application and you debit allotment and you credit share capital. Okay, so how much? Now this is based on the issued shares. So they issued 50,000 shares at $6 on application. Sorry. And 50,000 shares at $2 on allotment. The dollar sign. So you end up with 300,000 and 400,000. Okay, step number 3 is to record the refund of excess application money. Now, why do you need to refund? So keep in mind, they issued 50,000 shares, but they received 60,000 applications. So they need to refund 60,000 minus 50,000 times by the application amount, which is $6. So they have to refund $60,000. Now, how do you record the refund? Debit application 60,000 and we credit cash trust at 60,000. Step number 4 is when they close a cash trust and transfer proceeds in the cash trust to cash at bank. So how much is left in the cash trust? So 360,000. That was the amount they received when they issued shares. That's the amount from share applications. You need to subtract the refund of excess application money, which means they have $300,000 in their cash trust. So you debit cash at bank 300,000 and you credit cash trust 300,000. Step number 4. Okay, so step number 5 is when they receive allotment amounts. So you debit cash at bank. So allotment is a receivable. So how much they received? That's 50,000 times 2. That's how much they receive on allotment. It's 100,000. Then you put the dollar sign. 100,000, and we credit allotment. It's 100,000. Step number 6 is when they record calls. So it's $2 on calls. So you debit call. This is a receivable. That's $2 times, okay, times 50,000 shares. So what we have is debit call credit share capital, which is $100,000. Step number 7 is to record receipt of call money. You debit cash at bank 100,000. And you credit call. That's 100,000. Step number 8 is where you record share issue costs payment. Share issue costs paid. You debit share capital. How much did they pay? Yeah, they paid $12,000 on share issue cost, and you credit cash at bank. All right, hope this helps. If you have any further questions, queries, send me an email. I'm more than happy to help you out. Thanks.